Hi everyone, this is Daramola Talk Finance. In my previous video, I was explaining about how the economy was generally, and I was talking about interest rate inflation and how we can actually take advantage of inflation. Now, I have something to add to that. Recently and today, I saw a news. I signed up to this news and GB News, and they said that Morrison's is going to shut down some of its stores. Now, Morrison is one of the biggest stores we have in the United Kingdom. I also saw this morning that some of the hospitals or general hospitals in the UK are going to, they're going to reduce their workforce, I think, by 100,000. Now, if you look at these numbers, these are people, workforce, people with families that are working in this organization. Now, it means if Morrison's is going to close their store, it means certain people will lose their job. I know sometimes they have the explanation to say that they can move some people to some locations, but that's not feasible because there are some people that have house in the location where their jobs are. So it will make sense if you are relocating them to another further or far location. It means they will lose their job and they have to find another job elsewhere. So now the emphasis here is that economic cycle is called like vicious cycle. It's like a counter cyclical movement. Sorry for my economic terms. Because when you start seeing this news of redundancy, shorting of workplaces, sacking employers, there's a effect or there's an effect that is cyclical. In other words, when people lose their job, it means they don't have the purchasing power to go to stores to buy food stuff. So if let's say Morrison's, for example, the people that are buying food stuff from Morrison's lose their job, meaning if Morrison's usually have a sales of let's say 100 million in a month, meaning their sales might drop down to about 80 million or 70 million. So it therefore means that the profit they make has reduced. So Morrison will also want to reduce costs by reducing the workforce, right? Reducing workforce of drivers, reducing workforce of sales rep, warehouse operatives, and all of that. Meaning some set of people won't have job, right? So you can see how the vicious cycle is. Now, if those people working in Morrison's actually want to go into property or they want to pay their mortgage, it means they may not be able to pay their mortgage, meaning the property market is going to go for it. Now, there are people that supply raw materials to people in development and construction. So it means they won't be able to supply, meaning that those that sell building materials will make their sales. In other words, they'll go out of business. So you can see how this cycle is moving. So just this kind of information start reducing economic activities, meaning there will be recession or there will be slowdown in economic activity. And when they slow down in economic activity, it means you won't be seeing development, you won't be seeing sales, people are losing their jobs and all of that. And even the stock market is going to go for it because the companies that are traded in the stock market also sell goods and services. They won't be able to sell their goods and services. So the market is also going to react to it. Now, this is where my emphasis goes because at the point where there's economic uncertainty, it's not the time to panic like we are panicking now. If you see the S&P 500, Nasdaq, US 30, and all of that, the market is going down. Of course, it's going down, but I am very, very certain it's going to correct. After all this is going to correct because the government or America won't just watch to see the market go down like that. They will have to find something to do. Either they pump money into the economy, which brings about expansionary monetary policy. They want to reduce interest rate, or sorry, they want to reduce interest rate or increase interest rate. They want to reduce tax. They want to expand money or pump money into the economy. There's something called reserve. So the reserve for the bank might reduce. In other words, the money that the banks give to the central bank might reduce so that the bank will have some money, a lot of money in their deposit that they can give out as loan just to boost economic activity. You get the point? So it means there will be abundance, but it's actually better when you start making those investment decisions now. So when the economy start taking shape, you want to be in the ride, right? So you don't want to be buying stuff when the economy is at the top already. When you can see everything is going fine, it's going fine. That's when you want to go into it. You want to start when it's fate or it's just the risk we're talking about. So it doesn't make any sense. The economy is slow, the market is cheap. That's when you want to buy those assets. And that's what the big boy does. When everybody is idle, doing nothing, when they're afraid, they are selling, that's when they are buying. So my advice is that these are the times you want to start making your investment decision. As long as your decisions are based with wise concept. I mean, you're making a wise decision. This is the time to start investing. All right. If you have anything about investment, business, and finance, follow me on Daramola Talk Finance, or you comment, and I'm going to respond as fast as I can. Cheers and bye for now.